one of the qualities that, returning to the theme, one of the qualities of global reserve assets is typically they're yield bearing, right? Like if it's money market funds or government bonds or deposits at the Fed, anything that we would put in that category, typically they're going to bear yield. And yeah, maybe we can hear from a few of you on this idea of stablecoins bearing yield, or whether that should just be tokenized money market funds or tokenized deposits. But Matt, can you start off there? Obviously, we're in the context of a regulatory environment that doesn't allow yield-bearing stablecoins. But
yeah, I mean, to respond to the question, stablecoins are quite a poor reserve at the moment. They're quite a poor store of value at the moment, and that's because they typically don't pay any interest at all. So it's the digital equivalent of, holding cash under your bed. You can't earn a return on it compared to other assets in the economy. The reason for that, as many of us know, is that regulators around the world have restricted stablecoins, so they're not allowed to pay any interest. The reason why they do that is because they are concerned about the risk to the banking system. So they're concerned that if stablecoins were an attractive store of value, people would take their deposits out of the banking system and put them into stablecoins instead. And the risk there, as Dirk alluded to earlier, is that then you undermine the provision of credit to the economy. So there's a sort of a genuine macroeconomic fear that is behind that. I mean, I would tend to argue that those concerns are somewhat overblown. The idea that people would simply move their deposits into a stable coin. I would point out that you actually have significant channels that operate like that in the system today. So, you've got, for example, money market funds, which are fully backed, liquid claims in the same way that stablecoins are. You've also got e-money. You also have narrow banks, which are banks that back themselves fully with central bank reserves or highly liquid assets. So these sort of forms of money or quasi-money already exist in the financial system today. Stablecoins are economically quite similar, at least as compared as a store of value. So I don't see why stablecoins would pose a significantly greater threat than these sorts of claims that are already available out there in the market today. So I think this debate about whether stablecoins should be allowed to pay interest will keep rolling on. It's particularly lively in the US right now because the incumbent banking sector have been pushing back strongly against the idea that stablecoin holders will be able to earn any kind of yield, whether that's paid by the issuer or even paid by the intermediaries, where people might be able to sort of stake or lend their stablecoins. So yeah, this debate won't end anytime soon.